In the Chapter 9 lecture notes, we'll be talking about public colleges and universities. So first, before we begin, let's take an overview of the course and see where we've been so far. So you can see that in chapters 2 through 8, in other words, the first part of the materials that we looked at this semester, we talked about public, state, and local governments. So this is also known as GASB 34. What we're going to be looking at in Chapter 9 are public colleges and universities. So public colleges and universities include like the University of Maryland, University of Delaware, University of Texas, University of Tennessee, so on and so forth. Now, in Chapter 10 and 11, you see that these two things are grouped together because in Chapter 10, we'll be talking about private not-for-profit organizations. In Chapter 11, we'll be talking about private colleges and universities. So these two things, Chapters 10 and 11, are grouped together because you'll see that the accounting is very similar for private not-for-profits and private colleges and universities. Finally, we'll talk about Chapter 14, which is the federal government. Let's go over public colleges and universities. So in the textbook, they talk about the difference between public colleges and universities, so that's CU, colleges and universities, versus private colleges and universities. Now, the difference is basically the source of funding. So for public colleges and universities, they get their money from tuition, from students, and also from state authorities. Now, private colleges and universities get their funding typically from tuition, and they may also get grants, but tuition is a major source of revenue for private colleges and universities, whereas tuition and also money from state authorities is a driving source of revenue for public colleges and universities. Most people go to public school, as you know, so the composition and enrollment, the difference is that most people go to public school versus private school. But in this chapter, we're going to be talking about public colleges and universities. So first thing I want to mention is that public colleges and universities can be thought of as special purpose entities. So SPEs, or special purpose entities, are essentially like what we learned in a prior chapter where we talked about component units or discrete presentation. Special purpose entities are going to be entities that make their own decisions. So typically public colleges and universities make their own decisions. They have their own governing board. They generate their own revenues. And they have their own expenses. So with that in mind, we can think about public colleges and universities and how they do their reporting. So you can see here that there are many different configurations for public colleges and universities. So public colleges and universities can be thought of as engaging in governmental activities. So you can see here, you can think of them as engaging in multiple governmental activities. For example, public colleges and universities might be something that would appear in maybe a special revenue fund and also maybe an enterprise fund at the same time. Or you can think of it as a single governmental entity type. So in other words, it's engaged in enterprise activities solely. And depending on whether you think it's a multiple governmental activity type or a single, the financial statements are going to look a certain way. Now, you can think of a public college and university as being a governmental and business type. So you can say that we're going to do the reporting for public colleges and universities, assuming that they engage in not only governmental activities, but also business type activities. So that's going to govern or inform the way that they do their financial reporting. Or you can say that public colleges and universities are business activity type in nature. So that means that they engage in business. They're basically like a for-profit business. So that's going to mean that their reporting is going to look different again. And one of the major differences is that if you say that a public college and university engages in business activity, then there's going to be no government-wide set of financial statements that are going to be needed. Or, lastly, you can say that public colleges and universities engage in fiduciary activities. Fiduciary is when you help other people, so the money that you get doesn't belong to you. You just acquire money and then give it back by providing services. Now, here I note that the most preferred or preferable configuration for public and private colleges and universities is to engage as if you are running a business, so business type. So what you need to know here is that public colleges and universities can choose to report under a lot of different configurations, and depending on the configuration that they use, it's going to govern how the financial reporting has to look. Okay, so that's important for you to know, and just know that there are differences. Also, make sure that you know that both public colleges and universities, as well as private colleges and universities, prefer to report as if they were a business. Okay, now let's look at page 2, and for public colleges and universities, let's look at the financial statements that need to be generated. So for public colleges and universities, what we'll do is we'll talk about the 3 basic financial statements, and then we'll fill out a chart together. So public colleges and universities need to file a statement of net assets. That's essentially like a balance sheet. The balance sheet shows the financial position, like assets, liabilities. Public colleges and universities also need to generate a statement of revenues, expenses, and changes in net assets. So this is like an income statement. Finally, public colleges and universities file a statement of cash flow. So statement of cash flow shows how much cash is coming in and how much cash is going out. So we say cash inflows and cash outflows. Something to point out here, that for public colleges and universities, their balance sheet, which is also called a statement of net asset, doesn't contain stockholders' equity because you don't have shareholders in a public college or university. Everything is governed by GASB 35, and instead of stockholders' equity or retained earnings, you have what's called net assets. So net assets can be invested in capital assets. Okay, so invested in capital assets means, for example, let's say I have a building. And then I pay $100,000 for the building. Okay, so that's going to mean that net assets invested in capital assets, that would be $100,000. You can also have net assets that are restricted but expendable. That means that the money has to be used for a specific purpose. So there is either a time or use restriction on the money. You can have restricted assets that are non-expendable. So an example of that might be a permanent endowment. That means somebody is giving money to a school and that money cannot be spent. But the money can be invested, and if you earn dividends or interest, that part can be spent, but not the actual principal, the original amount itself. And finally, unrestricted. Unrestricted means that the money can be spent for whatever purpose you like. Okay, so let's delve into the financial statements a little bit more in depth. And first, we'll look at the income statement. Here it's called the statement of revenues, expenses, and changes in net assets. So what I want you to note is that you have operating revenues and operating expenses. So you have operating activities first, followed by non-operating activities next. That's the important thing that I want you to know. Now, operating means that these are main things that you do, like, for example, receive tuition revenue from students because you offer classes. Those are operating items. Non-operating tend to be things that are not recurring in nature, that tend to be unusual to some extent or infrequent. So, for example, if a state gives you an appropriation, they give you a certain amount of money, well, that money is nice. Maybe you tend to get it quite often, but that has nothing to do with your actual operations of your business. This is just the state giving you money and saying, okay, you can spend it for a certain purpose. Gifts also are kind of like something that happens on the side. It might be a little bit unusual or infrequent because if somebody gives you a gift, it's not like tuition revenue where you get it like every semester. And of course, we have investment income and interest on capital debt. These are things that are kind of like side, I don't want to say side hustle, but they're kind of like side peripheral items. So items that you see that are non-operating in nature would be listed second or after operating activities. On the next page here, you can see statement of cash flows. Now, for-profit entities, cash flow statements typically have three items. Okay, so when you do a cash flow statement for a for-profit business, typically you see operating activities, investing activities, financing activities. This would be for like a company like Google, for example, or a company like Apple, for-profit entities. Now, for public colleges and universities, they have, you can see here, 4 sections to their cash flow statement. They have operating activities first, then they have non-capital financing. Financing is when you raise money and spend money. So if you raise and spend money for things that are non-capital in nature, like for example, you're going to use it to provide education for students or special programs, those are not capital items. Capital is like a long-term asset, like a building, for example. If you decide to use money, raise money to build a new building, then that would be in capital financing and related activities. And finally, you have investing activities here at the bottom. Okay, so finally, we have a set of sample public, college, and university financial statements. So it's this handout here. And what I'm going to do is zoom out, and I'm going to show you a couple things. Okay, so we have the statement of net assets. This is like the balance sheet for a public college and university. Notice that they have assets and liabilities. They have current and non-current, or current and long-term assets. And they have separate columns. So they have primary institution, and then they have component unit. So this university, this is the default column. It's the primary institution. And they also have a hospital, like the University of Maryland Medical Center, for example. Or in this case, Midwest University Hospital. Right? That could be a component unit. That's a separate column. If we scroll down, you can see net assets are in 4 different categories. So you have invested in capital asset. It says net of related debt. Okay, so for example, let's say that I buy land for $100 and then I borrow $10. So what is the invested in capital asset net of related debt? Subtract out the related debt. If I pay $100 for land minus I borrow $10, then the net would be like 90. That would be included in this number here. Then you have restricted non-expendable, restricted expendable, and unrestricted. On the next page, you have statement of revenues, expenses, and changes in net assets. This is like your income statement. Again, you have operating revenues and expenses at the top, you can see. And you have non-operating here at the bottom. Okay, so you can see non-operating revenues and expenses are combined together here. Finally, you have the cash flow statement. So you can see here cash flow from operating activities, non-capital financing, capital and related financing, and investing. This category here, capital and related financing, what it has in common is that these are all capital asset related. For example, like if you purchase land, if you have a building, those are all long-term assets, and that's accounted for here.